So where's the market headed here in 2025? I think it's heading up. I think there's some good things on the horizon. Um, I was reading an article today. I'm gonna try to get it pulled up from the National Association of Realtors. And it says things are looking up. If you're watching on YouTube, you should be able to see this. If you're watching live, things are looking up. Okay. So in 2024, you guys have heard me talk about this. There, it was the least number of homes sold in 2023 and 2024 in nearly 3 decades. So in the last 30 years, I think the home sales in 2024, the lowest the last time they had been that low was 1995. So what has that done to home prices? Well, it's started to do what they call soften the market. The market has gotten softer because homes are sitting on the market longer. The average days on market is 45 to 60 days compared to probably 15 or 20 days when things were going insane back in 2021 and 2022. And so there hasn't been a lot of inventory moving. You got to look, these people bought homes at interest rates of what, 2 to 3 to 4% back in 2021, 2022. Well, rates have been at 7 to 8% for the last 2.5 years. And then home prices have been high. And so they haven't been able to get into the market. So what does that mean for us moving forward? Well, people haven't been able to get in the market, so it started softening up and it's bringing home prices down. So we still got rates that are number one, they're still high right now, but prices are starting to come down. Okay, low inventory means prices are starting to come down. Well, if we look, the feds are starting, dear God, let's hope, they're saying they're starting to finally get inflation to where it needs to be. And then if you look and see what President Trump and Elon and the whole Doge crew is trying to do with cutting cost, if we can get our inflation down as a nation, then that should have the feds lower the rates, which mortgage rates tend to trend what the Fed rates are set at. Not all the time. I think the Feds cut the rates by like 0.25 basis points, and the mortgage rates went up. This was a couple months ago, but typically the mortgage rates tend to track what the Feds are doing. And so we've had this period of high inflation, had this period of high home prices. Well, because the home sales have been so slow in 2023, 2024, prices are starting to come down, right? So that's step one, good news for investors. What's about to happen, step two, and you can see the NAR talking about this, are the Fed is expected to make further rate cuts in 2025 and 2026. And so as we have home prices coming down, then debt is going to get cheaper. What's going to happen is there's going to be that nice sweet spot of where, wow, prices are back to where they should be and rates are right here. This is nice. Who's it good for? Well, it's good for everybody. It's good for investors and it's good for the average home buyer. What starts to happen when those home prices lower and those rates lower? There starts to be more activity in the market. As that market starts to pick back up, what do you think happens over the next few years? 2027, 2028, 2029, 2030. What happens to the price of real estate? What happens to the activity in the real estate market? It starts to go back up. And so we are in this lull. Real estate has these different cycles, and we're in this lull right now to where home prices have been crazy, rates been crazy, home prices, the market's starting to soften, right? But we still don't have a ton of activity yet because they're still softening and rates are still high. And so the key for us as investors is the time is to hop in right now. I don't know how else plainly to say it. The time is to hop in right now, okay? Because these rates are going to drop down, and everybody who's in the market right now to starter home with a 3% rate or a 4% rate, as soon as these rates get to 5.5%, 6%, they're going to jump. They're tired of being in these homes. The average person stays in their home, I think, 5 years or less. People are sick of being in their homes. They're ready for an upgrade, but it's hard to walk away from a 3 or 4% interest rate. We're going to entice them with 5 to 6% as the Feds start cutting rates. Prices have gone down, and the market's going to start moving again. and we're going to have huge returns. So expected year-over-year increase in 2025 of existing home sales is supposed to go from 7% to 12%. Okay, the forecast for the national median home sale price is supposed to be up 2% to 410,000. In 2026, we're supposed to go up 10 to 15% increase existing home sales. And the median home price is supposed to be 420. Employment is supposed to increase. Interest rates are supposed to be in the 6% range. Overall, the market is poised to be in a strong place over the next couple of years. And so we had a really big bullish run after COVID. And I don't think we'll see that again because rates were so low, and I don't think they're going to let rates get that low anytime in the near future. But home prices are going to go up. I love how Dave Ramsey says that. I want you guys to check this out. I love old Dave. He's one of my favorite. Check what he says to his listeners on what his thoughts are on buying real estate right now.
Bull crap that's out there. Quit believing all this fear-mongering bull crap that's out there. If you're thinking about buying a house and the only thing you're waiting on is you're waiting on the real estate prices to come down or the interest rates to come down, don't wait. Go buy a house right now if you're ready, because the prices aren't going to come down, and if the interest rates come down, you can just refinance. The rate is temporary. So you marry
the house, you date the rate. You marry the house, you date the rate. If we look at the history of real estate prices over time, if I were to pull up a graph right now, I'll see if I can pull one up for everybody watching. It's going to go up in value over time. Okay. It's going to go up in value over time. I'm going to share my screen for those of you looking on YouTube or watching live. Check this out. Here's a graph of median home sales over time since 1960. What does real estate do? It goes up in value. Now, the one thing I disagree with Dave on is he said real estate it's not going to lose its value. He was alluding to, if you go listen to that episode, he was alluding to there's not going to be a huge crash. I think somebody was asking him about a real estate crash. What he's saying is there's not going to be a crash. We're in a strong economic position from a lending standpoint, and there's not going to be a real estate crash. There has been a softening of the market. I showed you guys in that graph just now to where real estate has actually come down a little bit from where it was. You guys can look here in Q4 2022 compared to today, home prices have dropped, right? But he's saying from a long standpoint, no crash in the immediate future, real estate is going to continue to go up. And then if you look at the history of interest rates, it's like a roller coaster. They go up, down, up, down, up, down. And I think Dave says it best. He says, marry the house, not the rate. Do you know how many people have missed out on so much wealth, so much opportunity cost has been missed because from an investor standpoint, okay, I'm not even talking about, I mean, we could talk from a personal buyer too, but people just not buying real estate because of the rate. And you guys hear me say this over and over and over. From an investor standpoint, what does the rate do to us? Rate hurts cash flow, okay? And it sucks. Dude, if you run a pro forma on a $100,000 or $200,000 rental property with a 7.5% interest rate compared to a 4.5% interest rate, you lose probably $100 to $200 a month worth of cash flow. That sucks, right? And if we're buying a big portfolio worth of 15 properties, you multiply that by 15, you're missing out on some strong cash flow. I get it. I don't like it. I can't do anything about it. But what I do know is that cash flow is one metric. And what I do know is rates go up and down, up and down, up and down. And so if I can find a property that maybe it's not cash flowing strong right now because rates are killing it, but it's a solid property that I'm getting at a discount that I can fix up through rehab and add value, and it's going to appreciate over time because it's in a good market while tenants pay off my debt. If I do not buy that property strictly because the cash flow is $150 to $200 less than it would be if my interest rate was 3 points lower, that is asinine. You are robbing your future self from so much wealth when you do stupid stuff like that. That is ignorant. Do not be so dumb to do that. Guys, zoom out, use your brain, Use the logical part of your brain. Get rid of the emotion and say, if I own this asset, it is going to go up in value over time. How many things in life can you buy that actually go up in value over time? Not many. Actually, 99% of people never buy something that does that. Do you know that? 99% of people never buy something that pays them back. That's why it's called the 1%ers. Only the 1% of people go and buy assets that pay them back and increase in value over time. And so you're telling me you could go control a $200,000 home that in 5 years statistically is going to be worth $275,000 to $300,000 while tenants have paid off your debt. You could have done that, but you didn't pull the trigger because the cash flow was $200 less bucks than you wanted per month. Don't go to Costco one time per month. Drop your Costco trip down and save the 200 months there. You're not going to buy this appreciating asset that a tenant's paying off your debt because of 200 bucks a month in cash flow. Do you hear how stupid that is? Do you hear how stupid that is? Cut 200 bucks elsewhere. I remember when I first started buying real estate, and I'm not saying that this is for everybody. You need to have a strong income coming in and a strong financial background. But dude, I didn't care. My first Airbnb, I didn't even care if I paid money in it every month. If it didn't even break even and it lost money, I really did not care. I said, okay, well, if I had to pay 200 bucks a month to own this property because I'm not able to break even, 200 times 12 is $2,400 a year. I'd still rather put $2,400 per year in this Airbnb than I would the S&P 500. But nobody wants to sit down and think like that.